Where can I apply and get the best small business loans? When it comes to funding your business, there are a lot of options to figure out. Funding is necessary. However, it is also tricky. So if you run a small business, you can take out a business loan to buy new equipment or expand your shop. And if you're interested in starting or keeping your small business up and running, a small business loan may be the right option for you. There are many types of loans that have a variety of needs that may suit your needs. Whether it be a franchise, property purchasing, or just getting some cash, you can get financing from banks, online lending groups, or community institutions. The best option really depends on what you need and what your business is. So if you are one of those people, then you have come to the right place. For today's video, exclusive to our Laptop Lifestyle members, we are going to talk about where you can apply and get the best small business loans. We're not just going to give you one method to earn money, but multiple different ways. Now, without further ado, let's get into the video. But before we get into detail, let us know first, what are the different types of business loans? There are a variety of loans that you can get that suits different business needs, but we are going to focus on the 9 types of business loans. The first one is called a term loan. Term loans are one of the most common types of small business loans and are a lump sum of cash that you repay over a fixed term. The monthly payments will typically be fixed and would include interest on top of the principal balance, which can be used for a variety of needs, such as everyday expenses and equipment. Small Business Administration or SBA loan is another type of loan that is enticing for small business owners who want a low-cost government-backed loan. Yes, you can get a cheaper government-backed loan from the Small Business Administration loan if you're a business owner, but it will take up to 3 months before you receive the funds. It also has low interest rates and fees, but the duration of application and approval can delay when you are awarded funds. If you don't need the cash fast, SBA loans can be a good option. Another loan that is similar to a credit card is called a business line of credit. Like a credit card, business lines of credit also offer a revolving line of credit from which one can withdraw money. But unlike a credit card, you are able to take out as much as your maximum limit offers and repay it over time. And there are many types of credit lines that have flexible withdrawal limits, so you only incur interest when you withdraw money. With these options, it's smarter to take out a line of credit than a traditional credit line, which requires the entire amount of the loan to be repaid the minute it is taken out. Unsecured credit lines are available for many businesses and usually don't require any collateral. But if you need to purchase large and expensive equipment but do not have the capital, consider applying for an equipment loan. This type of loan is designed to help you finance large, valuable pieces of machinery or equipment, such as computers or furniture. The item you purchased with the loan will be used as collateral against it if you do not repay it. For the business owners who struggle to receive on-time payments, they can choose invoice factoring or invoice financing. Though it can be a difficult task, it helps businesses get the money they deserve by selling their invoices to loaners and receiving a percentage of the invoice value upfront. Invoice financing will allow you to borrow cash using unpaid invoices as collateral. This is different from factoring because in this case, the company would buy your invoices and collect payments on them, instead of you having to collect those payments yourself as you would through invoice financing. Also, invoice financing can be a great alternative to traditional loans. With invoice financing, you use unpaid invoices as collateral for a cash advance of up to 90% of your invoice's value. The 2 top solutions in the market, factoring and invoice financing, are quite different, so it's important to understand them better before deciding which one is right for your business. The next is called commercial real estate loans or commercial mortgages. Commercial mortgages can help finance a new or existing property like an office, warehouse, or retail space. These loans act in the same way as term loans and may allow you to acquire a new commercial property, expand on a location's potential, or refinance an existing loan. Microloans are also another type of business loan that you can get. Microloans are small loans. They can provide up to $50,000, which could be enough for all of the equipment your business needs or down payments on shares in real estate. Many microloans are offered through nonprofits or the government, just like the SBA loans, though you may need some collateral like business equipment or an asset in order to qualify. And like traditional cash advances that are expensive, merchant cash advances can also be expensive. With a merchant cash advance, you can take out a loan based on future sales and pay it back with either a portion of your daily credit card sales or weekly transfers from your bank account. Merchant cash advances are a great way to start in business and finance your company without a heavy upfront investment. However, they are risky due to their high interest rates. Unlike invoice financing or invoice factoring, which is more sustainable and doesn't have high interest payment plans. However, if you want to open your own business, but don't have a lot of resources and funds, you can use a franchise loan as the starting point for your plan. Franchise loans can provide you with the money to pay the upfront fee for opening a franchise, so you can get up and running. And these businesses generally have insights into what does and doesn't work through the experience. You may even be able to get some funding from the franchisor that gives you an advantage over the other competitors. Now that you already know what are the different types of small business loans out there, let's go over all the details of the best business loans. It's difficult to choose the best business loans with so many options on the market. That is why our team is here for you, because we know that hard work will get you results. We recommend these top 5 small business loans that can analyze your personal credit score and ensure that you qualify. The first one is Kabbage. This one is a business line of credit. Kabbage, which is registered with American Express, might fit the needs of some borrowers who want a familiar and reputable lender. The company offers lines of credit at flexible terms and has an easy application process. You can borrow $1,000 up to $150,000. The annual percentage rate is 6% to 36%, and the minimum credit score should be 675. Kabbage loans are a good option for business owners with fair credit who want quick access to working capital. Next on our list is called On Deck, which is a term loan. On Deck offers credit decisions in a day so you can take care of your business. It's easy to apply online and the company requires lower credit score requirements than some lenders. The maximum amount of loan you can get is $100,000. It costs as low as 13.99 annual percentage rate with a minimum credit score of 620. Again, On Deck offers a fast term loan for small business owners with less than stellar credit who want to expand. The third on our list of small business loans is Credibly. Credibly, an online lender, provides small business loans and merchant cash advances with funds available the same day you apply. Their rates on loans are approximate to other online lenders, but they offer incentives for paying back early. Credibly enables you to pre-qualify for a loan before submitting an application. With their company, you can find out within as little as 2 days if you're eligible for a loan and have your funding in as little as 1 day. You can borrow $10,000 to $400,000, which has a 9.99 annual percentage rate to 36 annual percentage rate, and the minimum credit score is 625. Credibly offers a number of flexible loans that can help grow your business. They provide working capital loans, business expansion loans, and merchant cash advances. But if you want a quick, easy way to get financing, then SmartBiz is what you probably need. This is a great option for low interest rates, and it's an SBA loan that's less of a headache to get. It takes between 1 month to 1.5 months to get it once you apply, but it's worth considering if you qualify. It might take longer than your other options since it requires a personal guarantee. SmartBiz offer loans of up to $350,000 at annual percentage rates ranging from 8.27% to 9.57%. Also, SmartBiz has a seamless online platform. This makes the process of establishing a new business quicker instead of the months it would take a traditional bank. And last but not the least is called Rapid Finance. Rapid Finance offers business cash advances or a merchant cash advance to small businesses that have struggled with qualifying for financing due to their lack of collateral and lower credit score. You can borrow as much as $600,000, which comes with a 1.20 average factor rate, and the minimum credit score is 501. There's no collateral needed, but you will probably pay more in the long run for this type of loan. And as we know, cash advances are one of the most expensive forms of financing. Thus, we recommend exhausting all other financing alternatives before turning to a merchant cash advance. Among all of the different types of business loans, you might have been interested in getting a Small Business Administration or SBA loan. And you might be wondering if is it easy to get one? Well, the answer is yes and no. Small Business Administration loans are often more affordable than other loans because they're backed by the government. They also offer low rates and depend less on one's creditworthiness. Their intent is to make it as easy as possible for small businesses to qualify despite their size, a trait traditional bank loans lack. However, an SBA loan may not be a viable option for starting a business because it can be more complicated than applying for an easy business loan. To be eligible for this type of loan, you need to provide key documents such as a business plan, bank statements, and a business forecast, which take more time and effort to collect in comparison to the process required for a business loan. Now that we already have provided you with different business loans, it is time to choose the right small business loan for you. So how are we going to do that? First, you should make sure that you need to borrow a business loan before taking one out. If not, consider waiting to take out debt and exhausting other options because borrowing money might not be the best option. Even if you are unable or unwilling to obtain financing from another source, think about whether it is worth the risk of borrowing an easy business loan. You may be able to save money by going through a more traditional lender. Borrowing money for your business is not a bad idea, but you should not borrow more than you need. But when you borrow money, your business will pay a price. So make sure not to take on more debt than the lower limit. Moreover, each lender has a limit on the maximum amount they will lend out, so make sure that it is enough for your needs. Before taking out a loan, make sure you can afford to pay it back. To ensure that you can afford a loan, look at the repayment terms and all of the fees so you know how much you need to pay back. Make sure to access the annual percentage rate or APR to calculate what your payoff total will be. Don't forget to see if you qualify. For example, figure out the requirements for the loan and ask questions about minimum credit scores and years in business. Make sure you have all the information before you apply for a loan. And the last step is to apply everything. All of the small business loans that we have recommended should have an easy application, which requires you to fill out everything from your own home. If you are approved for any of these loans, the funding will be transferred into your bank account, which should only take a few business days. Even though it may be quick and easy to get one of these loans, it's best not to rush into business debt. Always start your search with the lowest APR you can find, which will lower the total cost of borrowing and your financial burden. This usually means going to more traditional lenders like banks or credit unions. Look over your credit report to see how you can improve your score. But if you have been denied by other lenders and you need the money, an alternative lender that offers easy business financing options could be great. Also, if you have an emergency at your business or stumble upon an opportunity with a limited time window, an easy business loan can help you out. Easy business loans may be worth it, depending on your needs. They carry a higher interest rate than traditional lenders, which means you pay more to borrow the money. If you've exhausted all other options and think you might need a business loan, consider an easy business loan. This can provide the cash flow that you need in a short amount of time. There you have our laptop lifestyle video for today. What do you think? Are you going to apply for an SBA loan soon? Let us know in the comments below. And don't forget to subscribe to our channel. Click the notification bell and like this video. If you think that we have delivered value, please share this video with one person. Just one share is enough for us, for you to show your appreciation for the commitment and hard work we all put together in creating this video that teaches and helps you on your mission of building your own fortune. And you don't know that one share could go a long way. And keep in mind that no matter how many times you're going to watch this video, you won't see any results unless you take action. Goodbye and see you at the next one.